Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hi, welcome to Talking Real Money Daily. I'm Don McDonald. Thanks for listening in. This is the short daily version of the podcast. We have these 3 days a week, and then 2 days a week, we have our weekend radio show on Como Radio in Seattle that we turn into a podcast for you. So you get a podcast 5 days a week, all about money and all about the reality of money, what we believe to be truly the best ways to deal with money. We take your calls at 855-935-TALK, 855-935-8255. And last week, we ran through all the calls we had stacked up. So if you'd like to call and get your question answered sooner than later, give us a call, 855-935-8255. I answer those questions on future podcasts. You can also send your questions in through our website, which is talkingrealmoney.com. A lot of great stuff you can find there. You can find links to like the New York Times article that I was in last week about Jordan Goodman, that interview with Jordan Goodman. You can set up an appointment with one of our advisors for a free talk with one of them. No high pressure, no sales pitch, no obligation, no cost. We want to help everybody. That's our goal at the firm Tom and I started 10 years ago, Vestory, that brings you the show. So 855-935-TALK is our telephone number, 855-935-8255. Couple of things today. We're going to take a couple of questions from the website, but I want to start with a new survey that was done by Morningstar really recently. It just came out, and it's entitled The Value of Advice: What Investors Think, What Advisors Think, and How Everyone Can Get on the Same Page. I'm going to focus today on what investors think and what investors value in the financial advice that they have provided to them. And wow, I got to tell you, you guys have this so wrong. Well, you got a couple of things right, but we still are living in a world that was seeded by greed, that was really created by the brokerage industry to make you think that magic was happening on Wall Street, that people were just so smart. Let's go through some of this for you. One of the top 5 things is number 4. This is one of the things that really bothers me. Number 4 on this list of things that investors value more than anything else is my advisor helping me maximize my returns. Maximize my returns. That has Wall Street written all over it. Yes, your broker is really, really smart and can make you more money. No, that's not why you invest. You do not invest to maximize your returns. You may gamble to maximize your returns, but investing is much bigger than that. Number 1, though, it is number 1. Help me reach my financial goals. My advisor should help me reach my financial goals. Absolutely, totally get that. Has skills and knowledge. Yeah, Explains things well. I don't know that should be number 3, but okay, I understand you want it explained. Number 5 has a good reputation. Great. Good reputation is really hard to determine. In positive reviews, technically, you can't even have reviews. If you're a fiduciary advisor, it's against the law. You can't have testimonials. So that one should go way down the list. Is knowledgeable on the tax consequences of investing. Now, it shocks me that one comes up that high. That's at number 7. And this one, as an advisor, and all the other advisors in the country agree, this should be near the top of your list. And it's down at number 8. My advisor understands me and my unique needs. That's middle of the road important to you guys. It's more important that you maximize your returns, which is just foolish. It has to be about you. That's the only way you're going to reach your financial goals, is if it is about you. Then the next one, this should be higher up too. Keeps my interests in focus with unbiased advice. Really? You think that's only number 9? Number 10 is has a clear fee structure. Okay. Is approachable and easy to talk to. Is easy to get hold of. Well, that should be down, lower. Presents themselves in a professional manner. That's a lot lower than I thought it might be, which I guess is good. But get this. Down near the bottom of the list, there are a couple of things that really bother me. Acts as a coach/mentor to keep me on track. Again, that should be something that is way up near the top of the list. Now, the next one has up-to-date technology. That should be way down low. But the bottom of what investors value most in their advisor, I'm shocked. Because I think it should be number 1. Maybe number 2. And it's at the very bottom. Helps me stay... Let me re-say that. Helps me stay in control of my emotions. There have been a couple of very, very robust studies done that showed that one thing, when you're talking about maximizing your returns, that's the one thing, or one of 2 things, I should say, both of which came up very low on your priority list. But that's one of those things that should be way up at the top of your list, because 2 different detailed studies found that keeping you in control of your emotions so that you don't buy when prices are high and sell when they are low can add between 1.5, get this, these are actual numbers, can add between 1.5 and 3% per year to your returns. Now, in an environment when average annual returns are 5, maybe 1.5, that's pretty substantial. 3 is huge. And yet it's dead last. That's the one thing you should look for more than anything else, is someone to help keep you on track, because that's the way you're going to reach your financial goals. That and keeping fees low, which was what? Down at number 10? What was that? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah. Fees low, controlling emotions. There's very little that is more important than those 2 things. 855-935-TALK is our number here on Talking Real Money, the Daily Show. 855-935-8255. And I'm going to do 2 questions that came in from TalkingRealMoney.com, because they're a little different. And one of them is actually really fast, so this won't take very long at all. This comes from Karen. And Karen says, I share your opinion of annuities, and I don't have any. Except 8 years ago, I opened a charitable gift annuity with an organization whose work I support. My rationale was, sure, I can just write them a check, but this way I will get a little payment every year. It's too late for me to change my mind, obviously, but if this was a mistake, perhaps someone else will benefit if you discuss it. On your show, which, by the way, I enjoy very much. Thank you so much. Well, Karen, you didn't make a mistake. You see, there are annuities that make sense for some. An immediate annuity can make sense. It can make a lot of sense for someone who needs the certainty of an income stream. There are a lot of circumstances in which a relatively certain income stream makes a lot of sense. I don't want to say totally certain, because when something is created by an insurance company, I don't believe it can use the term certain or guaranteed, because insurance companies have gotten into trouble and have had their ability to pay threatened. But you did something great for a charity. They have future money, and you get a little bit of an income stream off of it. Win-win no one loses. So I don't think you did anything, not a thing wrong in this case. I think you did something very right. I really do. And then this question comes in from Mickey. And Mickey says, I have a large sum of money, $75,000 to $100,000 to invest this year in the market. I have a list of Vanguard funds that I invest in. My question is, I am planning on investing every 2 weeks with a set amount throughout the year until the money, the cash, is gone. What are your thoughts? Thank you, and I really enjoy the podcast. Well, Mickey, I'm great with averaging into the market with your regular contributions because you earn money on a dollar cost averaging basis. It's a nice way to make sure you're disciplined. You put it in every time you have a paycheck. But in this case, you have a bunch of money coming, a whole bunch of money in a lump sum. You're going to dollar cost average, and you're going to dollar cost average because you're worried that the market is too high. I know why you're doing it, but what you're doing isn't sensible. Because we don't know when the market is too high. We can feel it's too high and it goes higher. There were a lot of experts back in 2011, 2012, even 2010 who said the market, it's recovered too much. It's going to go down again. 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 They've been saying that every year for years and years and years. Well, it did go down finally in 2018. Actually, it went down a little. I think it was 11 and 15, something like that. And it's going to go down at some point, but we don't know how much. And we do know something about the past, and that's all we have to go by. Of all the years that we've been able to study a really broad stock market, and that goes back to 1926, out of all those years, calendar years, approximately 75% of those years, stocks have gone up. In only 25% have they gone down. And so you're playing against the odds. By putting it in slowly, you're likely to put it in when it's up more than when it's down. If you have the money, invest it for your risk tolerance, for your volatility tolerance, and for your need for risk, and just do it. Just do it. Because one thing we do know, if you leave it in cash, it is almost absolutely going to lose you money. So you can have the probability of making money, it's not guaranteed, or the almost guarantee of losing it until you finally get it in. I would choose the putting it all in. Dollar cost averaging only makes sense from dollar cost averaged earnings, the paycheck you get every 2 weeks, month, quarter, whatever you paid. So that's my opinion. I'm pretty confident in it. I would just get that money invested. Sure, the market could go down, could also go up. You just don't know. And when you have it and you're ready to invest it, maybe the market will be down then. It could be. You're trying to play a game with the market. You can't do it. It doesn't work. It's not effective. 855-935-TALK is the number. 855-935-8255 on Talking Real Money, the Daily Show. Please, oh, please, oh, please help us build an audience. The best way to do that is to go to Apple Podcasts or iTunes because they account for about 75% of podcast listeners. And subscribe to the podcast. It actually does something to their algorithm that kicks us up. And we want to get into that top 200 investing shows again because there are so many people out there gaming the system and putting garbage. Go sometime to iTunes and go to the business investing subcategory and just take a peek at some of the absolute unadulterated junk that makes it into the top 200. Now, either people are just dumb as stumps and listen to all this stuff because they honestly think that somebody's going to tell them how to get rich quickly, or somebody's gaming the system. It's one or the other. I mean, come on. One of the top 11, the number 11 show right now, as I'm looking at Apple Podcasts, is Mobile Home Park Investing. Really? Mobile Home Park Investing. Tens of thousands of Americans are really excited about the potential for mobile home parks. I don't think so. I just don't. And then number 16 is just a Chinese symbol. I don't even know what that means. I could look it up, but I have a feeling it's all going to be in Chinese. There are 24 ratings for this podcast with the Chinese symbols and one written review. The written review says, terrible. If you really want to charge your subscriber, why enlist here? See, I don't even know what that means, and yet it's a top 20 podcast. So help us out. Go subscribe. This is wacky. Okay. Thanks so much for tuning in, listening in. Tell some friends, and we'll talk to you again tomorrow when we probably will have the weekend podcast edited and ready for you. And then I'll do some more dailies later in the week. Take care. Remember the number 855-935-TALK, 855-935-8255.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.